which are the ones that you feel more comfortable being in, partly because, treasuries attract because even when you realize they could drop back again once the all clear sounds, as you put it, but at least treasuries are liquid enough that you can get in and out of them without worrying that you're not going to be able to do so at the time that you want to do it.
Garfield, then, earlier this week, following that Iran attack over the weekend, people, oil traders were calling for $100 oil. Is $100 oil in sight now, you think?
Certainly. When you consider that, as I said, we're gaming out worst case scenarios. At the moment, we're flying in the dark. We don't have real confirmation of what any of this has actually involved and what the responses would be. But one immediate, obvious, extreme measure that Iran can pull is to close the Straits of Harmunz, and if that would certainly send oil towards, if not beyond, $100 a barrel, or set it well and truly on the path to it. So $100 a barrel looks more likely now than it looked a week ago, and significantly more likely perhaps than it did even on Monday and Tuesday. That's not necessarily saying you want to build it in as your base case, but it's there.
Yeah, certainly. You talked about the Strait of Hormuz. Of course, we haven't seen any disruptions as of yet. Yeah. But yeah, as you say, watching those flows very closely as well. Garfield, thank you so much for your time and really kind of sticking through with us here this hour as we kind of basically we're ripping off the rundown here right now and just tracking what's going on across these markets. I want to bring in once again Annabelle Drewlers, who's watching all things GMM as well as your crypto markets here this morning. But let's start what's on top of mind now.
Well, I think it's really interesting because what you were just discussing there with Garfield, early this week we had investors and traders we were talking to that saying $100 oil was not on the horizon. But actually, as we say, it is perhaps a greater risk really at this point in time, given this risk of a widening rift that we're seeing in the Middle East. And it's being reflected. We've already been tracking that move we're seeing in Brent crude, for instance, now above that $90 a barrel mark. You've got that gain in WTI, but also what's interesting in the last few minutes on the GMM function is that those petroleum products have as well started to see that gain there. Gas oil, for instance, heating oil. These are petroleum products rising off the back of that move that we're seeing here for crude generally. It's a big tone of risk aversion that you're seeing here, and it's probably feeding out the most right now in equities because you're starting to see those really statistically outsized moves for Taiwan. The Nikkei in particular, look at that drop there below that 37,000 mark for the benchmark. Currencies-wise as well, big losses there. The Mexican peso, for instance, standing out nearly 2% weaker here, but it's a theme of general weakness for EM currencies in particular that have been really feeling the brunt of dollar strength, even over the course of this week. But the likes of the Mexican peso, the Korean won, the Taiwanese dollar, the Philippine peso, all of those are EM currencies. The Aussie dollar, meanwhile, very sensitive, particularly commodity exposed, and you do have that drop there down 0.8%. Swiss franc, of course, it's that move that we are seeing now into those havens being expressed there, nearly gaining 1%. We've even seen some gains for the Japanese yen, and broadly it is that flight to safety here that you again see expressed through those moves in bonds. You're seeing that rally. Yields are dropping off the back of that. How we are setting up for the day's trading, though, it is not looking great as we look ahead to the opens across Europe in particular. You're seeing Euro stocks there guiding for a drop of more than 2%, the likes of the German DAX as well. FTSE futures now looking for a contraction of 1.5%. So that's the state of play here. It is that story, really, I would say, worsening risk aversion that's coming through.
So, Annabelle, obviously you've been looking at crypto assets as we are in this Bitcoin halving. How are these latest developments affecting the crypto markets?
Well, it's not looking great. Crypto, we know, is, again, an asset class that is very sensitive to geopolitical developments, very risk-reward ratio very much in play when it comes to this asset class. And you see Bitcoin, for instance, here dropping 4.7%. It has been that move that we've seen as well in those smaller secondary tokens, the likes of ETH, Solana as well. Those are actually seeing an even greater contraction here, given that we don't see the same sort of trading volumes here. They're more thinly traded tokens, but you are seeing the likes of Solana there down 7% at this time. Bitcoin, we actually saw it dropping early this week below that 60,000 mark. It'll be interesting to see, of course, how it develops through the session today. But as well. Just a few hours ago, we were near an all-time record high. Now, quite a gap from that point in time. As you said, it is interesting, given that we're just a few hours away now from the Bitcoin halving taking effect.
All right, Annabelle Drillers, yeah, a lot going on here right now. You mentioned about Japan. You take a look at that year-to-date chart of the Nikkei 225, and it just goes to show we've basically fallen from the March peak in a pretty substantial way. We're basically now entering into that correction territory. You take a look at what we've been seeing here. So we're still up about 10% year to date, but we basically have peaked since just about a month ago. So certainly that's one to watch here. We're also looking at just Japanese equities in general. We're set for the worst day since February of 2021, just today alone, the worst week we've seen since April of 2020. In fact, also the CSI 300 actually outperformed Japan in a big way just this week alone as well. So we're obviously watching what goes on. WCRS, that's where you're seeing the dollar moves in FX, and basically you're seeing every single currency getting hit by the dollar, with the exception there on the right there of the Swiss franc and the Japanese yen, which even now the yen is having a bit of a haven bid, a slight one compared to the Swiss franc, but it's there, which goes to show how people are really kind of flocking to these traditional havens here right now, Steve. Yeah, and just the latest news flow that's coming through, and it is trickling through. We're hearing that Israel told the United States Thursday, U.S. time, it's Friday in Asia, late Thursday in the United States, that that Israel had planned an Iran response within 24 to 48 hours. This is looking as though this is that response. All right, I want to check oil now. Of course, that's seriously where we're seeing a lot of that movement here and that pop in Brent and WTI this hour. There you go, 3.6%, or back to $90 for Brent, $85 for WTI here on the reports of these explosions in Iran. I want to bring in Vandana Hari now. She's joining us, founder of Vanda